Walmart, quite simply, you can see it there. It got crushed today. It took the entire market along for the ride. The world's largest retailer warning investors that they're going to not only lower their full-year guidance, by the way, second warning on that, they're going to lower their earnings growth. They did for the next 3 years. Now, management, they blame the usual suspects, including the strong dollar. But make no mistake, this is a lot more complicated than currency. The dollar was strong yesterday before the stock lost $20 billion in market cap. This has been a lumbering giant for more than a decade. In a way, they're finally admitting it is, and it's going to take a lot of time to fix this. Also, though, you've got higher minimum wages. You've got major investments in e-commerce that really, all of this stuff, they're saying it's going to be happier employees or they'll blunt the growth of Amazon. They've got a lot to deal with. But what we want to know, though, the much bigger question is, how bad is this for us? Is this a proxy for the overall economy? Joining me now, Shah, Capital Wave Forecast Editor from MoneyMorning.com, and Liz Peek, thefiscaltimes.com columnist. Liz, we had retail sales out this morning. When that number came out, I saw at least two major firms lower their third quarter GDP. Then we had the Amazon news, and then we had the Fed Beige Book. Yeah. All of them, none of them said anything good about our economy.
No, everything basically is pointing to a slowing, a loss of momentum, which is sort of what everyone anticipated going into this period. But it doesn't bode well, particularly all this consumer data for holiday sales. And so this is, we're now looking at what is the holiday season going to look like. People are going to be becoming nervous about that. But I think there's just no question we're seeing a slowdown pretty much across the board. Some of it is the strong dollar. There's no question about it. But that, in addition to some tempering of consumer spending, I mean, the good news is, of course, the Fed will probably put off more and later. Yeah,
I always said I don't really buy that. If that was the good news, why weren't we up 200 points a day instead of down 200 points a day?
At some point, investors need to see some growth in this economy.
Oh, yeah, we have to. I mean, ultimately, the market does ultimately work when you grow the top and bottom lines in a way. Right. But Shah, here's the thing that really, I think, worries a lot of people at Walmart. Not only were we expecting for them to kind of increase for the last part of the year, their guidance, but that it goes out 3 years. Caterpillar also says we're going to have layoffs for the next couple of years. These large, giant American companies are forecasting things not being so great years down the road.
Walmart's got some serious problems that they're trying to address. And I think the problem is that investors are looking at that and saying they just don't have enough time to do what they have to do before the stock's going to get hit. Obviously, at 10% plus hit today, that's a huge hit for a company that size. So they're looking at 2017, their fiscal 2017. Their CapEx is already reduced, and they're going to use about $1.1 billion of that to up their game in
right, so
online.
We know some of it is Walmart specific.
They're trying to move forward, but they're still a backwards-looking company.
And there's an earnings story. It's not just the sales.
When management knocks down their expectations for earnings 12%, that's a huge hit. What else is the public going to do except sell the stock?
And then, of course, they warned in August already. So we already, the stock was coming down. Over the last 3 years, Amazon is up like 200%, and this is not flat. So there are some elements to this that make it unique. But I do wonder and I do worry about the overarching idea that you were talking about the economy doing better. We just never gained any traction in this economy.
I totally agree. We've been in this sort of slow growth mode. Every time a quarter, like the second quarter this year, pops up a little bit, you get slammed in the next quarter. And look, I think we have an administration that is not fostering growth in this country. One of the things that's weighing on the economy right now is the fall in oil prices, energy prices, huge downdraft in oil field investment.
That was supposed to be great, though, right? That was supposed to help us. Real quick, though, Shaw, you were negative. You reiterated that on Barney this morning, and you look really great. Is that in part because of the economy?
Absolutely because of the economy. There's no optimistic signs that I see on the economy in terms of growth potential. So I'm looking at the Dow maybe falling to 15,000, certainly long before it gets to 18,000. The economy is struggling. I think that means the stock market is going to struggle along with it.
All right, guys. Thanks a lot. Really appreciate it.